Welcome to ACCA Academy YouTube channel. In this section of ACCA Academy tutorial, I want to examine functional budgets in budgeting and budgetary control systems. If you are coming across my lecture for the first time, please like the video and also share it with others. If you are a returning subscriber, I say thank you for being part of this channel. What is a budget? A budget is a quantitative plan prepared for a specific term period. A quantitative plan prepared for a specific term period. Budget is normally expressed in financial terms and prepared for 1 year. Budget is normally expressed in financial terms and prepared for 1 year. So, functional budget. Functional budget is a budget for a particular aspect of the entity's operations. Functional budget is a budget for a particular aspect of the entity's operation. The budget prepared in each division of an organization is said to be the functional budget. You know, you have several divisions. Each division, that is every division of an organization, used to prepare a budget. The budget prepared in each of those organizational divisions are called the functional budget. The functional budget that are prepared vary with the type of business and industry. It varies with the type of business and industry. In manufacturing company, functional budgets include, functional budget of a manufacturing company include, number one, we have sales budget. Sales budget. Number two, production budget. Sales budget. Two, production budget. Three, material usage budget. Four, material purchase budget. Five, direct labor cost budget. Number six, we have overheads budget. Then we might equally have the budgeted financial statement. But these are some of the functional budgets that are normally prepared in a manufacturing organization. I'm starting with number one, which is sales budget. If you want to sell a product, certain units of that product will be sold. It will be sold at a price. And by the time you sell more than 1 unit of that product, to get the revenue from it, you have the price times quantity. Therefore, the budget that shows the quantity sold, the price, and the total revenue is said to be the sales budget. A sales budget shows the overall sales quantity, price, and value. So, format of sales budget. Sales budget. Let us assume different products are sold. We have products. We have the quantity sold. Price for a unit, and the value. The quantity may be in units. Now, if product A and B are sold, X units, the price times quantity times price will give you the value. So if you now sum it up, you have the budgeted sales revenue, budgeted sales revenue. That is the format for sales budget. Number 2, we have the production budget. Production budget shows the expected production during the period. It shows the budgeted production for the period. Format of production budget. Production budget for the period. Assuming the organization are selling more than one product, or they used to manufacture more than one product. So we have products. Let's assume you have product A and B. These are the products, and this will be in units. Units. So your production budget, you start with your budgeted sales quantity. Budgeted sales. It is the quantity you need. Where you are given sales revenue, you have to divide it by the selling price in order to get the sales quantity. So sales quantity or the budgeted quantity will be the budgeted revenue divided by the standard selling price. So now you add closing inventory of finished goods. Remember, sales is a finished product. So it is the finished products that will be sold here. So you have the closing inventory of finished goods, not the inventories of raw materials. So you add the closing inventory of finished goods. You now less the opening. You less the opening inventory of finished goods. So if you less the opening inventories, you arrive at the budgeted production for the period. Budgeted production. You arrive at the budgeted production. Number 3 is material usage budget. Material usage budget. A material usage budget is the budget showing the expected quantity or unit of materials consumed in the production process. A budget that shows the expected unit of materials consumed in the production process is said to be the material usage budget. Now, to prepare material usage budget, let's assume you have two materials. Let's assume two materials were used, material X and material Y. The level of usages in respect of each of these materials will be given. That is, the number of units of each of the materials that will be used in the production will be given. That is what I mean by the level of usages. So, you have material consumed. I want you to note material usage, which is usage per unit times budgeted production. Usage per unit times budgeted production. This will give you the material usage budget. And if the price is given, so you multiply by price, then you get the value. So by the time I take question as work example, you'll be able to understand this better. The number 4 is material purchased budget. Material purchase budget. The budget that shows the material bought during the period is said to be the material purchase budget. This budget shows the quantity and price and value of material bought during the period. It shows the budgeted quantity, price, and value of materials bought during the period. So, material purchase budget. Let's assume you have material X and Y. Then material usage in number 3 must have been calculated before material purchase budget can be calculated. So you have material usage, the result obtained from step 3. Then you now add closing inventory of raw materials. This time around is raw materials, not finished goods. Of raw materials. You add the closing inventories of raw materials. You now less the opening inventories of raw materials. After deducting this, you get the budgeted purchase quantity if there is no losses. But if there are losses, you add losses. So you arrive at the budgeted purchase quantity. Assume there is a loss in respect of material Y, but no loss for material X. So you now multiply by unit price. Then you get the budgeted purchase cost. So this is the material, the format for material purchase budget. The heading is material purchase budget. Material purchase budget. Number 5, we have labor cost budget. Labor cost budget shows the budgeted labor cost for the period. It shows the amount budgeted for labor, the amount the entity planned to spend on labor. So the budget showing that is the labor cost budget. Now, to compute the labor cost budget equal to budgeted hours times standard rate. That means these two variables will be required, where LCB is labor cost budget, BH is the budgeted hour, and SR is standard rate per hour. This budgeted hour, BH, is budgeted production times standard hour. Budgeted production times standard hour. SH stands for standard hour. Therefore, labor cost budget, the format will appear just. Let's assume we have skilled and unskilled. unskilled labor and skilled labor. To compute or to solve labor cost budget, you will need budgeted hour. So you have budgeted hours. Remember, I've told you budgeted hours equal to budgeted production times standard hour. Budgeted production times standard hour. This will give you the budgeted hour. This BP stands for budgeted production. BP, budgeted production, times standard hour. This will give you the budgeted hours. Then this budgeted hour, you now multiply by standard rate. Standard rate per hour. Rate per hour. So if this rate will be in naira, this one is in hour. So when you multiply it, you get the budgeted cost. Budgeted labor cost. This is the format for labor cost budget. After labor cost budget, number 6, we have overheads budget. Remember, overheads are indirect costs. We don't have a particular way of solving this. Question will be solved based on the way it is structured. So overheads budget, that is number 6. Overheads budget. So meaning that to understand this very well, you have to understand everything about overheads so that you'll be able to tackle questions in any way it is structured. Overheads are indirect costs. So the amount budgeted to spend on the company's overhead, the budget for that is called overheads budget. It is the budget showing the amount the entity plans to spend on overheads. Overheads budget is a budget that shows the amount the entity plans to spend on overheads costs. So I've told you this will be tackled the way the question is structured. Now I want to take a question as work example from ICAN study test, performance management. Keep watching. Example, X Limited makes and sells 2 products, product X and product Y. It says budget for next year is to sell 2,500 units of product X at a sales price of 410 naira per unit, and 3,200 units of product Y at a sales price of 400 naira per unit. The following cost information is expected to apply in the next year. We have product X and product Y. Usage in kilograms, cost per unit of X, usage in kilograms of Y, and cost per unit of Y. We have direct materials, which include material A, 30 kgs, 30 naira per kg. 1 kg is required for a unit of X at the cost of 30 naira per unit. Then usage of Y, 1 kg is required for a unit of Y at a cost of 30 naira per unit. Material B, 80 naira per kg, 0.75 kg is required for a unit of X at a cost of 60 naira per unit and per kg. Then for product Y, 0.50 kg is required for a unit of product Y at a cost of 40 naira per kg. Then material C, 30 naira per kg, which is 2 kg is required for a unit of X at a cost of 60 naira per kg. 3 kg is required for a unit of Y at the cost of 90 naira. Then the total material cost per unit is 150 for product X and 116 naira for Y. Then we have direct labor. Usage per hours is given for both product X and product Y. We have grade 1, 100 naira per hour. 1 hour is required for a unit of X at the cost of 100 naira. 0.80 hour is required for a unit of Y at a cost of 18 naira. Grade 2, 18 naira per hour. 1.50 hour is required for a unit of X at a cost of 120 naira per hour. 1 hour is required for a unit of Y at a cost of 18 naira per hour. The direct labor cost is 220 per hour and 160 for product Y. The unit cost, which comprises materials and labor, is 370 for product X and 320 for product Y. The following opening and closing inventories are budgeted. We have opening, we have closing. Finished goods, cost, and number of units, then the total. We have units and total. For product X, the cost is 370 naira and the number of units is 300. Total cost is 111,000. This is the cost per unit. This is the number of units in opening inventory and the total is 111,000. The closing inventory is 200 units at a cost of 74,000. For product Y, the opening inventory is 320 at a cost of 150 naira per unit. Total cost is 48,000. For closing inventory, we have 100 units at a cost of 32,000. Then we have the opening inventory of finished goods totaled 159,000. Then the closing inventory of finished goods is totaled 106,000. We have material A, B, and C. The cost per unit is 30, 18, and 30. The number of kgs required for a unit is 400, 450, and 150 for A, B, and C respectively. The total cost is 12,000, 36,000, and 4,500. The total is 52,500. Then the closing inventory of materials is 380 kgs, 400 and 120 for A, B, and C respectively. The total cost is 11,400, 32,000, 3,600, and 4,700, and 47,000. The total inventory is 211,500 and 153,000. Required. A. Prepare functional budgets for sales, production units, material usage, material purchases, and labor usage. B. Prepare a budgeted profit or loss account for the period. This question is obtained from ICAN study test. Now, let's have the solution to the question. Solution. The name of the entity is X Limited. We have X Limited. So the first requirement, you have to prepare functional budgets for sales, production units, and materials. So now let's have sales budget. Sales budget. Two products were manufactured and sold, product X and product Y. Now let's have products. Products. Then we have units sold, unit price or price per unit, sales revenue or budgeted sales, budgeted sales revenue. This will be in naira. The unit is in units. The product, we have product X. You were told its sales budget for next year is to sell 2,500 units of product X at a sales price of 410 naira per unit. Product X, 2,500 units is budgeted to be sold at a price of 410 naira per unit. So if you have 2,500 times 410, that gives us 1,025,000. Then product Y. And 3,200 units of product Y at a sales price of 400 naira per unit. 32 at 400. 3,200. Price of 400. So that gives us 1,280,000. 1,280,000. So you now sum up the revenue. 1,280,000 plus 1,025,000. That is total 2,305,000. That is budgeted sales revenue. So that is all about sales budget. Now let me call this is A. Let me have it as A1. A2, you equally have to prepare the production budget in units. Now let's have production budget in units. Remember, 2 products were manufactured and sold. 2 products were produced. In units. I've told you to prepare production budget. You start with budgeted sales in units. Budgeted sales in unit. It is the unit that will be used. Now, 2,500 of X were budgeted to be sold and 3,200 units of Y. So we have 2,500, 3,200. So this you add closing inventory. Closing inventory of finished goods. Closing inventory of finished goods. It is the closing inventory of finished goods that will be added, not that of raw materials. So after adding that, you less opening inventory of finished goods. Remember, sales, the product that will be sold is a finished product. That is why it is finished goods inventory that will be used. Every calculation, everything here must be in units. If the amount is given in naira, you have to convert it to units, because what we need here is units. So what are the opening and closing inventories of finished goods in units? Following opening and closing inventories are budgeted. These are opening inventories, while these are closing inventory. You have finished goods. That means, this is cost. And I've told you what you need here is units, not cost. So you are given the opening inventories in units now. For product X, 300 units, and Y, 150. These are cost per unit, and these are the total costs when those inventories were valued. So it is units we need. And these are opening inventories. So this is where we have the opening inventories, 300 and the 150. 300, 150. These are the opening inventories. The closing inventory are this. The unit is 200 and 100. So 200, we add the closing inventory, 200 and 100. If you add the closing inventory, you'll be having 2,700. Then here you'll be having 3,300. So you now subtract the opening inventories. You subtract the opening inventories. If you subtract 300 from 2,700, you'll be left with 2,400. If you subtract 150 from 3,300, you'll be left with 3,150. These figures are our budgeted production for the period. Budgeted production. As part of our functional budget, we have done the sales budget and production budget in units. Then we are in need of material usage budget. Material usage budget. Materials, let me have this as 3. Materials, material usage budget. I have told you to solve material usage budget. You multiply your budgeted production as calculated in step 2. You multiply it by the usage per unit. So, material usage. Material usage. You have 3 materials for product X. Product X, we have the usage is 1, 0.75, and 2. Product X. Product X. The usage is 1.75 and 2. 1, 0.75, and 2. You now multiply this level of usage by the budgeted production calculated in step 2. The budgeted production for product X is 2,400. 2,400 units is our production. So we use this usage, level of usage multiplied by 2,400. 1 times 2,400, that will remain 2,400. Then 0.75 times 2,400, that gives us 1,800. That is for B. 2 times 2,400, that will be 4,800. That is for material C. Product Y. The level of usage given for product Y are 1 for A, 0.5 for B, and 3 for C, which is 1, 0.50, and 3. Remember, the budgeted production for Y is 3,150 as obtained from step 2 above. 3,150 units. That is the budgeted production. So 1 times 3,150, that will remain 3,150. Then 0.5 times 3,150. That gives us 1,575. 3 times 3,150. That gives us 9,450. If you sum up this, you get the material usage. Material usage. 4,800 plus 9,450. That gives us 14,250. 1,800 plus 1,575. That is total 3,375. Then 2,400 plus 3,150. That is total 5,550. Then you have unit price is given for the materials. How much is price for a unit of material? For product X. The price for a unit of material A is 30 naira. That of B is 80 naira. That of C is 30 naira. 30, 80, 30. 30 naira 80 naira, 30 naira. Material usage budget. Material usage in naira. 5,550 times 30. That is 166,000. 166,500. For B, 3,375 times 80. That is 270,000 naira. 270,000. For material C, 14,250 times 30. That gives us 470,250. 470,250. If you sum up this cost for material A, B, and C, the total cost will be 470,250 plus 270,000 plus 166,500. The total is 906,750. 906,750. That is the material usage budget. Then the next budget is purchase budget. Number 4, material purchase budget. 3 different types of material were bought. Material A, B, and C. And they were given in kilograms. To prepare or to solve material purchase budget, you start with material usage. Material usage budget. From our working on material usage, the quantity is not the value. The quantity for A is 5,550. From our working number 3, 3,375. That is for B, and the 14,250 for C. Now add closing. You add closing inventory. Of materials. Now less opening inventories of materials. Opening inventories of materials. And all this will be given in kilogram. So that will give you material purchased quantity or budgeted purchase. Now, back to the question. These are opening inventories of material in kilograms. 400 for material A, 450 for material B, 150 for material C. These are the opening inventories. The closing inventories for materials. Material A is 380, B 400, C 120. What we need is in kilogram, not the value, not the amount. It is the kilograms we need. Closing inventories for material A is 380. That of material B is 400. That of material C is 120. Now let's add. This will be 14,370. This will be 775. 0, 13, 9. This will be 5,930. Then the opening inventories for material A is 400. We subtract the opening inventories. For material B is 450. While that of material C is 150. If you subtract the opening inventories, then you have material purchase budget. Material purchase budget. That is in kg. This will be 5,530. 3,775 minus 450. This will be 3,325. Then we also have 14,370 minus 150. Then you'll be left with 14,220. Then what is the unit price? The price of material. The price are given 30, 80, 30. 30 naira, 80 naira, 30 naira. So you multiply the price. That is material purchase cost. 5,000. Okay, 14,220 times 30. 14,220 times 30. This will be 426,000. 426,600. Then this is 3,325 times 80. Then you have 266,000. 266,000. This is 426,000. This is 266,000. Then 5,530 times 30. This will be 165,000. 165,900. So you now sum up the three costs. Therefore, budgeted purchase cost. So that will be the addition of these three items. 165,900 plus 266,000 plus 426,600. That is totaled 858,500. That is the budgeted purchase cost. Number 5. Now we want to compute direct labor cost budget or labor usage budget. Direct labor cost budget. Two categories of labor were used. We have grade 1 and grade 2. Grade 2. Then we also have grade 1. We have direct labor usage in hours. Grade 1, 1 hour is used in product X. Product X. 1 hour for grade 1 and 1.5 hours. So the ratio is ratio of 1 to 1.5. Remember, the budgeted production for product X is 2,400 as obtained here. So Production is 2,400. So we use that 2,400 units, we use it to multiply it. So 2,400 times 1, that will be, for grade 1, it will still remain 2,400. For grade 2, 2,400 times 1.5, that gives us 3,600. Product Y. Product Y. The ratio for product Y we have 0.8 and 1.0. 0.8, ratio of 0.8 to 1.00. And the production for product Y, the budgeted production is 3,150 multiplied by 3,150 units. So 3,150 times 0.8, that gives us 2,520. Then 1 times 3,150, that will still be 3,150. If you sum this up, you have the budgeted hour, budgeted labor hours. 2,520 plus 2,400, that is 4,920. Then 3,600 plus 3,150, that is 6,750. We now multiply this budgeted hour by the standard rate. The standard rates were given in the question. Grade 1, the standard rate is 100 naira. For grade 2, the standard rate is 80 naira. So we have standard rate. Grade 1, 100 naira. Grade 2, 80 naira. Let's multiply now. Labor cost. Budget. 4,920 times 100. 4,000. That is 492,000. Then the second one, 6,750 times 80. 6,750 times 80, that gives us 540,000. 540,000. If you add the two costs together, therefore, labor cost budget is totaled 540,000 plus 492,000. That is totaled 1,032,000 naira. That is all about the A part of the question. In the B part of the question, you have to prepare the budgeted profit or loss account. Budgeted profit or loss account. So your profit or loss, you start with your budgeted sales. Budgeted sales, that is from working 1. That is our budgeted sales revenue, which is 2,305,000. 2,305,000. Less cost of sales. As cost of sales include opening inventories. Opening inventories. Back to the question. You have the following opening and closing inventories are budgeted. These are the opening inventories, while these are the closing inventories. The opening inventories of finished goods is 159,000, and that of raw materials is 52,500. The total opening inventories is 211,500. So our opening inventory, let's just use the total. 211,500. Then we add purchase. Budgeted purchase. That is from our purchase budget, material purchase budget. That is working number 4. Working 4. Budgeted purchase cost 858,500. 858,500. Then working number 5, we have direct labor. Direct labor budget. That is working number 5. And we got 1,032,000 from there. 1,032,000. So, if you sum up all this, you have 211,500 plus 858,500 plus 1,032,000. So that is total 2,102,000. From this, you less closing inventory. Less closing inventories. Our closing inventories amounted to 153,000, which comprises the closing inventory of finished goods of 106,000 and closing inventories of materials of 47,000, total 153,000. So now let's subtract 153,000. If you subtract 153,000, then you'll be left with cost of sales of 1,949,000. 949,000. If you subtract that from the budgeted sales above, so you'll be left with minus 2,305,000. You'll be left with 356,000. That is our budgeted gross profit. Budgeted gross profit. 356,000. This marks the end of this video. In my next video on functional budget, I will provide a standard work example that will involve the losses, normal loss, abnormal loss, or any other forms of losses. Please drop the love emoji, like the video, and also share it with others. Thanks for watching ACCA.